Dave Skirman of First Ontario Credit Union on this Finance Friday. Back for another segment. Good morning, Dave.
Good morning, Bob. How you doing?
Good, good. Hey, when we chatted last time, we were talking about mutual funds. We had a comment come up, posted online, relating to a recent sales practice in mutual funds that most of the big banks are adopting. It reads, financial advisors at banks are basically salespeople. How do I find a good financial advisor who isn't just selling the mutual funds from the company they work for?
Well, that's a great comment, and there's been a lot of this comments and editorials in the media about this sales practice. And let's talk about it for a little bit. When you and I talked a couple of weeks ago, Bob, we talked about the choice of mutual funds. There's about 5,000 different mutual funds in Canada. Each of the big banks owns their own family of mutual funds. So one in particular, they would own 30 or 40 mutual funds out of those 5,000. And if you go to an advisor at a bank branch to get advice, then they have their own mutual funds to sell, as well as many other funds, AGF, Trimark, Fidelity, lots of choices out there. Well, there's new legislation, new rules coming out for licensed advisors. It's called Know Your Products, and what those rules are in place for is to ensure that advisors are providing the best product available to meet your individual specific needs. So what the banks have decided is that their advisors are only going to sell their own proprietary in-house funds in their branches, which means that the choice is being limited to consumers rather than expanded to consumers. That's not really the intent of Know Your Product rules, and regulators are not looking too kindly of it. They've written to the banks to ask them about this, so we'll see how it plays out. But to the poster, there's 100,000 or so licensed mutual fund advisors in Canada. So there's lots of choice in advisors to go to. There's independent advisors. Credit union branches offer their own products plus many other products. And funny, the banks all own their independent brokerage houses, and you can go there to buy other funds besides the bank's proprietary funds, but you just can't buy them inside the bank branch. The other thing you could do is go on to an online investor like Qtrade Investor, and there's lots of great online tools that you can go and do some research yourself as well. So again, you don't have to get advice from a bank advisor. You can, obviously, and they're licensed to do that. But if you want choice, you're only going to get the bank's products if you go there.
Okay. We also have a viewer question from Larry in St. Catharines. I have a question regarding credit card interest rates. If I were to call my credit card company and ask them if I qualify for a lower interest rate, will this impact my credit rating?
Well, Larry, not generally. When a lender pulls a credit file from the credit bureau, basically it's because you've applied for credit. It's called a hard hit. So if you're applying for new credit, for instance, you have a credit card and you want to increase your limit, that's a hard hit because you're seeking more credit. If you're just making a change to something existing, they can pull a credit file that's called a soft hit that doesn't affect your credit score. And if you're just changing the interest rate on your card, it would probably be a soft hit rather than a hard hit. However, having said that, the interest rate on credit cards are basically tied to the card itself. I don't think too many card companies are going to reduce the interest rate on your card because you asked them to. You can take a different card. Now, the average interest rate on cards obviously is quite high, 19 or 20 or 21%. And if you have a card like that, and some of them have an annual fee as well, you probably have a rewards program and other features and benefits that are associated with that card. If you want a lower fee card, and you can get them, you can get a card for $11.99, for instance, at any of the card companies. It's probably not going to have a lot of those features. It may not have a rewards program. It's not going to have other travel benefits and features and benefits that the higher interest rate cards have. So again, it's your choice. My recommendation is, we talk about many times on Finance Friday, you shouldn't carry a balance on your credit card anyway. Right. So the interest rate almost shouldn't matter.
Yeah.
If you're going to carry a balance, go to a bank branch, a credit union branch, get a personal loan to pay that balance off at a whole lot lower interest rate.
Okay, that's our time, and thanks for that question, Larry, and thank you, Dave. If you've got a financial question you want covered by Dave, email your questions to financefriday@firstontario.com or get in touch through Twitter at finance_Friday. And if your question or topic is covered on air, you can win a gift card from a local business in your community. Thanks, Dave. Have a great weekend.